welcome to another episode of Street Biashara. I'm your host, Brenda Nyamichaba. Now, the shilling has remained stable against the US dollar in 2019. However, in July, the Kenyan shilling weakened against the dollar to a near 5-year low due to importer demand and excess liquidity in the money markets. Now, the Central Bank of Kenya was quick to defend the weak exchange rate, insisting that it had nothing to do with the news that hit the economy in July that the Treasury CS Henry Rotich had been indicted in corruption charges. Now, CBK went into the open markets to claim some liquidity of the economy, which saw the shilling stabilize against the greenback. Now, the question we're looking at today is, what is an exchange rate and what affects it? Well, let's find out.
Exchange rates, I think that's the rate at which currency can be changed for a different one. Like say dollar changes to pound or pound changes to shilling.
The rate at which one currency exchanges for another.
I think it's how one currency compares with another.
An avenue where different currencies are changed from different countries.
Ime exchange kama pesa ama nini?
Exchange rate. Exchange bei ya kitu. Difference in currencies. Difference in price in different currencies. Yeah.
Exchange hao ndio wanachua kwa sababu wako na nini, ukienda Central Bank wako na vitu vingine vinaitwa government bonds, Unaona? Sasa vitu kama hiyo raia waelewi government bonds ni nini? Hao ndio wanajua.
In foreign exchange rates whereby for this instance the rate at which you change the Kenyan currency to a foreign currency and back through buying and selling. It usually depends on the economy. It can be high exchange rates, it can be low exchange rates. So, for example, I myself I do some online trading, whereby you look at particular seasons, whereby you look at the interest rates, determine which the best time to buy, which is the best time to sell, and that's how you make some money. Okay. That's in foreign exchange.
Now, after going on the streets of Nairobi and getting to know what exactly you understand by the term exchange rate, it's time for us to have a clear breakdown and understanding of what exactly exchange rate is. Now, joining me on Street Biashara today is financial expert Mr. John Ochieng, who's going to help us understand what exchange rate is. Thank you for joining me. Now, I just want to jump right into you breaking it down for us what an exchange rate is.
An exchange rate, in simple terms, is the price of the domestic currency in terms of a foreign currency. Or you could say it's the number of units of one currency that you need to give to get 1 unit of a foreign currency.
Okay, wonderful. Cool. Now, what are some of the factors that can affect an exchange rate?
Generally, an exchange rate is affected by market forces of demand and supply in the market. But in addition to that, there are key factors that normally affect the value of currency of any given country, and in return affects the exchange rate. One of them is exports and imports.
Okay.
When a country exports goods to a foreign market, there's usually high demand for the currency of the country that is exporting goods. So that makes the currency of the exporting country to appreciate. So exports and imports is one of the factors. Another factor is political stability. A country where there's political stability, the exchange rate tend to remain stable, as opposed to where there is political instability. Like for instance, what was in Zimbabwe, sometimes back where there was political instability, the currency, actually the public lost confidence in their local currency and started using the US dollar and the SA rand.
Okay.
Another factor that affects exchange rate is the rate of inflation, what we call the purchasing power parity between two countries. So, like for instance, we have Kenya, where we use Kenya shillings. We have the USA, where we use US dollar. So when the inflation rate changes, let's say in Kenya, it increases. It means that the purchasing power of the Kenya shillings drops, and that in turn affects the exchange rate. Another factor that affects exchange rate is what we call the interest rate parity, or the international Fisher effect. So normally what happens is investors normally look for like a premium when they are investing their money. So if the interest rate in one market increases as compared to, if the interest rate in market 1 increases as compared to interest rate in market 2, so what we see is that investors will move their funds from market 2 to market 1. So that means that, for instance, if the interest rate in the US dollar in USA increases as compared to the interest rate in Kenya, there will be a high demand for US dollar. That makes the US dollar to strengthen against Kenya shillings, and as such you'll see a weakening of Kenya shillings in the foreign exchange market. Another key factor that affects exchange rate is what we call national government policies. A national government can come up with a policy to encourage cheap exports. So in that case, the national government will devalue the local currency to ensure that we export as many goods as we have. So at that point, the value of, let's say, Kenya shillings will be lower as compared to what it would not be in the market. Another key factor that is very, very important is what we call balance of payment.
Okay.
So mostly you find countries that have deficit in their balance of payment, they tend to have weaker currencies as compared to the trading partner. So that's why it's usually very important if we strike a balance. In as much as we're importing, we also try to improve the levels of export so that we strike a balance in the balance of payment here.
Wonderful. Thank you so much for that insightful information, Mr. John Ocheng. Really appreciate it. Now, I do hope that you understand what the term exchange rate means, because next time when I come on the streets to ask you about the same term, I hope you'll have the right answer. Do join me on the next episode of Street Biashara as we get to learn more about business and financial terms.